Good afternoon. Welcome to GrainTV. It's Wednesday, December 26th. The markets came back from Christmas not in a happy mood. They sold sharply lower. Logan, take us through what some of the action was today.
Yeah, Kevin, well, we did see a lot of red on the board here. You know, really from a technical standpoint, we saw a lot of weakness out of corn. Front month corn traded down through that $7 per bushel area. And if we actually look out to new crop 13 corn, we're now back below $6. We haven't been in this area since about July. So certainly from a technical aspect, things aren't looking good. Fundamentally, though, not really a lot to buy on here at this point.
Yeah, I mean, there was some fresh export news out this morning, the export inspections report. Take us through some of that data.
Yeah, you know, if we look at wheat, that came in right in line with trade expectations. Corn was actually at the high end of expectations, so that was good to see. But soybeans really continued the trend here, exceeding trade expectations. 44 million bushels of soybeans reported and inspected here. But you know, Kevin, this week, corn did come in at the high end of expectations, but it seems like in general, we're still really not where we need to be.
Yeah, definitely so, Logan. Our story all year long has been the weak pace of corn exports, and this year was just more. This week was just more confirmation of that.
Yep.
The green line is what we normally see this time of year. What is scaled in such a way to meet that USDA forecast, and the red bars are actual exports for the week. And you can see we're running well behind that pace.
Right.
Add it all up, we're 78 million bushels behind pace. I got to believe USDA's got to do something about that in their January report. And for beans, it's the total opposite. You know, we are strong ahead of that pace, 200 million bushels ahead of that pace. I know everyone thinks we're going to see exports back off once South America's crop comes online, but this is such a huge lead that I got to believe USDA might tweak these numbers, don't you think?
Yeah, I'm right in agreement with you there, Kevin. I think, you know, this report here out of the January WASDE is going to be big for giving this market direction. And in the December report, the USDA really didn't move much of the balance sheet. You know, we saw 10 million bushels increase to the soybean crush number. But I think with this continued sluggish pace of corn exports and the really rapid pace of bean exports as of late, I think that something has to be done to reconcile the pace that we've seen here recently.
Yeah, and the other thing I'm looking at in that January report is that stocks number. It's our first confirmation of what feed use has been in the first quarter of the year. You know, when we look at things that we're observing on a regular basis, exports, ethanol, we add them up for that first quarter of 2012. You know, what we're seeing are fairly sharp losses from last year.
Right.
You know, exports, 208 million bushels exported in this quarter, the first quarter of the marketing year, versus last year, 354. Ethanol, my projection is about 1,100 million bushels versus last year of about 1,221. You know, in total, that's a 250 million bushel shortfall to last year's demand. So feed use is going to be a huge wild card. Is it going to be on par with what USDA is calling for at a 9% clip, or is it going to be something better? I think there's a chance it could be a little stronger just because of the high livestock numbers we saw in the first quarter of the marketing year. You know, Logan, if I'm a farmer, what do I do with this information right now?
You know, I think right now it might be a good time to take a serious look at how sold you are for 2013. You know, obviously not sell the farm at this point, but I think with the technical weakness we see in this corn market, we now see corn, that DEES 13 corn contract now trading below $6 a bushel. I think it's time to take a serious look at where we are in terms of technical price and fundamentals and how they go along with that. You know, as you said, export demand really has been lackluster. Ethanol demand has really been lackluster, and I think it's a little bit. I wouldn't be just putting all the chips on this feed number coming in higher than expected out of the January report.
And I think farmers got to look at the fact that for the next 3 months they're unprotected until they get to that February window when they get crop insurance. You know, we've got fiscal policy risk associated with the cliff. We've got lack of demand. We've got, you know, decent weather to good weather in South America, depending on where you're looking. And basically, I see nothing to really change that perception in the next 2 to 3 months. So if I'm a farmer, I got to take some serious looks at 2013 right now.
Certainly. Well, as we do move toward that January WASDE report and the quarterly grain stocks report, hopefully, or actually certainly at this point, that will be giving the market some direction here as we kind of drift lower. We'll keep you posted on all the expectations for that report here on GrainTV. I think that wraps up our show, though, here for Wednesday afternoon. Thanks a lot for joining us, guys. We'll see you tomorrow.